So once again, this is going to be the practice for the final exam. Okay, so I give you scenarios here. I give you a chart of accounts, and you're expected to journalize each transaction. Okay, and you're expected to complete all 10 of the accounting steps of the accounting cycle. So let's go ahead and work through this together one at a time. Okay. First scenario we have here is on August 1st. You borrowed $15,000 cash from the bank for your business. Okay. So what is going to be the first thing I'm going to do? If I borrowed $15,000 from the bank, okay, what does that mean? So let's take a look at my chart of accounts. Okay.
Business loan and checking.
Now in this case, right, I borrowed $15,000 cash.
Oh, that's cash.
Yeah, then you just use the cash account. Okay. So that's the very first thing here. It is August 1st. And we're going to do business loan and cash. Okay. Business loan is 210, and cash is 102. For $15,000. Now it's up to you if you want to use descriptions. Okay. This one's pretty straightforward. You borrowed money from a bank, right? You don't, since this is your work, it is up to you if you want to have full-on descriptions or not. Remember, this is an exam, so I don't expect you to fill out the entire journal 100% because I'm not going to be watching you, or this isn't a free response. So that one's pretty straightforward. Okay. So then now, on August 5th, on August 3rd, you deposited $12,500 cash into your checking account. Okay? You deposited $12,500 worth of cash into your checking account.
Checking cash.
Good, right? So this one's pretty straightforward, right? We're putting our cash into the checking account. And yes, this is a real transaction that can occur. Okay, 12,500. Right? Now, every journal that I want you to do, I also want you to follow the lines of also placing it into the ledger as well. So I want you to do it exactly how we did it in class. So in this case, let me go ahead and rewind and plug all my numbers back in here. So we got the first journal that we did was business loan and cash. So here, Okay, we got 15,000 here. I gotta find my business loan. Which is account number 210. Okay. And then we put money into my checking account. Okay. And you put the money in here. Okay. Format your cells how you like, but there you go. Okay. So we got the first one, right? And the second one. So then let's see what happened next. August 5th, you paid $1,500 for rent with a check.
Rent and checking.
Rent expense and checking. Okay, so let's take a look at my chart of accounts. What number is my rent expense? 610. Checking 101 for 1,500. Okay. That means ledger. Checking account. It's 88 or 85, excuse me. Rent. Right, so now you have 11,000 in your bank. Okay. Okay. And then you paid rent expense. There you go. 610 rent expense. August rent for $1,500. Okay. So then let's see what happened next. Okay. Then it says on August 8th, you purchased 100 coffee mugs at $1 each on an account. Okay. And it says use periodic FIFO. Freight charge was $25. Okay, so in this case, periodic FIFO. So what does that mean? What does that tell you? If I have to journalize that I purchased 100 coffee mugs at $1 each, okay, using periodic FIFO, how do I journalize this transaction?
coffee mugs, purchase expense, freight expense, and accounts payable.
Okay, that's way too many accounts.
Oh wait, just remove coffee mugs.
Perfect, right? In this case, it's periodic inventory, so we must recognize it as a purchase expense, right? We have freight expense, and because we place it on an account, accounts payable, okay? So purchase expense is 605, freight expense is 601, and accounts payable is 201. Okay? So let's go ahead and take a look at the journal one more time. So you purchased 100 coffee mugs for $1 each on an account, and freight was 25. So what numbers do I have to plug in?
$100 for purchase expense, and what was rate?
$25.
Oh, 25. Okay, yeah.
Giving you a grand total of 125. Okay, if you want to make a note here, you can, saying that you purchased 100 okay. So let's plug our numbers into our ledger. Okay. Here's 605 purchase expense. Okay. We got freight expense. For 100 coffee mugs for $25. Oops. And we also have accounts payable. Um, Coffee mugs for 125. Okay. You're also responsible because I also provided you the periodic inventory table as well. Okay, so making sure that you do fill it out if it's necessary. So quantity, how many items do we have?
$100.
Mm-hmm. Times $1. Okay. Now, because I said specifically that use periodic FIFO, so costing method. So then how much should be your cost per item?
125.
Good, $1.25. Okay. Okay. So then August 10 rolls around and you purchase $65 of supplies with cash.
Supplies, expense, and cash.
Not supplies expense, because in this case we didn't use our supplies just yet. We're just only purchasing regular supplies.
So regular supplies, 105.
Yes, regular supplies at 105. We only use the supplies expense when we adjust the supplies that we have on hand. So usually at the end of the accounting period, when you count how many inventory items you have left, right? That's the same idea right here. Right? So in this case, I bought $65 worth of supplies and I paid with cash. Supplies is 105, cash is 102. Okay? And we spent $65. Okay? So general ledger. We bought some supplies. Okay? And we used cash to pay for it. Okay, so therefore, you should have that much cash left. Okay? So then let's take a look here. Then on August 12th, okay, August 12th, you bought a cash register with cash for $285.60. Okay? And let's see. And sales tax was 8.25%. So in this case, hold on. Yeah, so in this case,
It would just be cash and cash register.
yeah, in this case, the sales tax is already included. Okay, so let's see what my accounts are. Cash register is 110 and cash is 102. And we paid $285.60. So go ahead and plug that into your ledger.
Excuse me.
Did you have a question?
Yeah, under cash,
Mm-hmm.
the total from the 2,500 to the 65, we minus, right?
Correct.
We keep minusing? Okay,
Correct, because we're spending money.
okay.
Mm-hmm. Right. So in this case, we started off with $15,000. Right. We deposited $12,500. Then we spent $65 for supplies, and then we just bought a cash register for $285.60. So you should have left $2,149.40 on hand. Right? So that was just a cash register. Then on August 16, you sold 25 mugs for $5.99, okay, each for cash, okay? And sales tax is 8.25%. Okay? You sold 25 mugs for $5.99 each for cash. Sales tax is 8.25%. Okay? How do we journalize this?
Just sales and sales tax.
And what am I receiving out of it?
Cash
Right?
or check or cash.
Right. I sold it. I sold each item $5.99 for cash. So in this case, cash. Okay? Cash, sales, and sales tax payable. So cash is 102. Sales, let's see. Sales we have is 401. Sales tax payable is 205. Okay? Now in this case, I sold 25 mugs, okay, for $5.99 each. So how much total sales did I receive?
149.75.
149.75. I have to figure out how much tax that is. So how much tax is on your coffee mugs?
$12.35.
Oops. typo. Hold on. Let's do this again. Okay, $12.35. Okay, so that means how much cash did I gain in total from the sales?
162.10.
162.10. Okay. Right, and then you can make a note in your journal that you sold 25 of those coffee mugs. Okay. So then I have to go to my ledger, cash, for, was it 162.10 you said?
Yes.
162.10. So that's going to increase my cash flow. Okay. And then I had sales and sales tax. Sales 401. Since I sold 25 mugs at $5.99, should be for $149.75. And then sales tax, which was $12.35. Okay. Anything else that I have to do with this transaction?
No,
Okay. Good. Why?
because coffee mugs is periodic.
Excellent. It's period. We're using periodic inventory. So in this case, even though we sold coffee mugs, we don't need to adjust our inventory because we don't do that till towards the very end. Okay, good. Excellent. All right. So then on August 18, a customer decides to return 3 mugs for a full refund in cash. Okay. And of course, yep, full refund. Okay, so in this case, a customer returns 3 mugs for a full refund.
Would that just be sales returns and allowance and sales or cash? Cash, right?
Yes, cash. Now, there's one more thing that we have to include.
And sales tax payable.
Yes, right? Because we charge them tax, we have to give them back tax. Right? So sales returns and allowances is account number 405. We have to give back their sales tax money, so 205, and we have to give them back cash. And 102. So in this case, if I originally charged my coffee mugs for $5.99 each and 3 of them are being refunded, how much is that?
$17.97.
$17.97. So how much tax am I obligated to have to give back?
I think it's $1.40.
$1.48. Good. So in grand total, $19.45 is what you have to give back. Okay. Okay. So there you go. You got it for $17.97, and then $1.48 for tax, and then you have to give back a total of $19.45. So sales returns and allowances is account number 405. Here you go. Okay, so sales returns and allowances for what was it, $14.97? No, $17.97. And then we gotta return the tax. For
$1.48.
$1.48. So therefore, you should have now $10.87 left in your sales tax. And now you have to go to your cash because you had to give back the cash. And what was it, 1945?
Yes.
1945. So therefore, you now have 2,292 and 5 cents. Hmm. All right, let's see what else has happened. So now it's August 20th. You sold 50 mugs, $5.99 for cash, okay, to customer A on an account. Okay, sales tax is still 8.25%. Okay, so here you end up selling 50 mugs for $5.99 to customer A on an account. So we sold to customer A on an account. So how do we journalize this?
Just sales, um, sales tax payable and account receivable.
Good. Okay. Accounts receivables, count 103. Sales is 401. Sales tax is 205. Okay. Okay. So in this case, I sold 50 mugs at $5.99. What's my total sales here?
$299.50.
$299.50. How much tax?
$24.71.
Good. So that means in grand total, they owe me $324.21. Okay. So we got accounts receivable, sales, and sales tax payable. Okay, for $324.21. Okay, we got sales. For $299. 50?
Yes.
Okay. And then we have some tax on top of that. Okay, for 24.71. Okay. So we're now on the second page here. And let's see what happened on the 22nd. 22nd, you sold 10 mugs for $5.99 each for cash, right? And sales tax is 8.25%.
Cash and sales tax payable.
Good, right? Cash, sales, and sales tax payable. Okay. So if I sold 10 mugs at $5.99, how much in grand total is my sales?
$59.90.
Okay. So how much tax should I be charging?
$4.94.
Okay. So that means I should be receiving a total of $64.84. Okay. And sold 10 mugs. Okay. So was that $64.84 for cash? Oh, I did write sales. Okay, we're on page 2, and we received $64.84. So therefore, you should have now $2,356.89. Okay. We incurred some sales, so account number 401. Okay. For $59.90. Should increase your sales to now $509.15. Okay. We also had to charge sales tax, so 205. For what was it, $4.94? Okay. Let's see what else happened. Okay. Then customer A, right, pays in full for the amount that they owe with a check. Okay. So August 25th, customer A decides to pay with a check.
Account receivable and checking.
Accounts receivable and checking, good. Okay. For 825, oh, checking and accounts receivable. So in this case, 101 to 103. For how much?
324.21.
For accounts receivable of 324.21. Good. All right. And then here, customer A paid in full. That means I need to go to my checking account, put in that on the 25th, received check from customer A for 324.21. Okay. So therefore that should increase your checking account to 11,324.21. Okay. And then you need to decrease your right to 0. Okay. And then now it says you paid for the purchase of coffee mugs with a check.
Checking and accounts payable.
Good, right?
Okay.
So you paid for the purchase of the coffee mugs on August 30th. So again, you're going to reduce the amount that you owe, and you're going to reduce your checking account because you paid for it. For how much? How much were your coffee mugs?
125.
125. Okay. So let's go ahead and plug those numbers in. So general ledger, checking, and accounts payable. Let me go to accounts payable first. Accounts payable It is now August 30th. Brings that account down to 0. And because we paid with our checking account, that was for $125. So now your account has decreased now down to 199.20. Okay. All right. So then the next scenario says that on August 31st, you have a total of $50 worth of supplies left on hand. Those are called adjustments. So in this case, let's complete my unadjusted trial balance first and then go ahead and proceed to the rest. Okay. So unadjusted trial balance. Okay. Okay, so first we have our checking account. Okay. What's my balance in my checking account?
199.21.
Okay. What account is next after that? And my cash account. So how much is in my cash account? Oops, sorry. Ledger. My cash account.
2,356.89.
Okay. What account is next? Oh, okay. Guess I have to type it all in. Checking, cash. What account is next? I think it's account receivable. What account receivable? There's nothing there, right? Account receivable, 0 balance, so we don't need to put it in there. What's next? Coffee mugs, nothing there yet. Supplies, for 65.
Yeah.
Okay. Then you have your cash. What was that?
No, nothing. I was saying cash register.
Okay, perfect. Thank you. So we got the supplies for 65. Then we have the cash register for
285.60.
285.60. Okay. Then we have next account is accounts payable. Nothing there. Wait, hold on. That's accumulated for that one. Next is accounts payable. There's no account balance, so you don't need to add that in there. Next, we have sales tax. Sales tax. For a total of
40.52.
40.52. Okay. Then we have our business loan. for a total of 15,000. Okay. All right. So then what's next after my business loan? Sorry, the ledger. Equity. We have nothing in equity. Income summary, nothing there. Sales. How much is in my sales?
509.15.
509.15. Sales. Oops. Just sales. For 509.15. Okay. And then we have sales returns and allowances. For how much?
1797.
1797. Okay. Let's see what else is next. We have cost of goods sold, nothing there yet. Freight expense for 25. And a purchase expense for 100. Okay. We have purchase returns and allowances, nothing there. We have rent expense for 1,500. And let's see. No supplies expense, no depreciation yet. So in this case, run your tallies. I get a total of 15,567. Good. My account's balance. Okay. Excuse me. Okay. So now we completed our unadjusted trial balance. So now we got to do our adjustments and then we can go ahead and complete the adjusted trial balance, okay? So in this case, right, let's take a look at our adjustments. Our first adjustment is that on August 31st, you should have a total of $50 worth of supplies left. That means you used up $15. So how do I journalize this adjustment?
Supplies and supplies expense.
Good, right? Because in this case, we used the supplies. and we need to adjust. That means in our supplies, we no longer have $65. We have 50 remaining. So again, supplies expense account is account number 615. And supplies is 105. And I used $15, right? Because I have $50 left in my account. So there you go. Now that I did my adjustment here, I'm going to go ahead and plug in my number. So supplies expense, 831. For $15. Okay. And I'm going to go ahead and go to my supplies. So supplies number 105. So since we used $15, we should have $50 remaining left in our account, which is exactly what it says here, that we used 15 and we have $50 worth left of supplies. Okay. Now it says here on August 31st, we need to depreciate 1 month worth of the cash register. All right, so here are the things that you need to know. It has a life of 3 years, no salvage value, and use straight line. Okay. So this is where I'm going to go into my tables here. Here you go. I got a depreciation right here. We have the asset item is a cash register. Okay. Depreciation method, straight line. Useful life, 3 years. Okay. Salvage value, none. Okay. Date that you placed into service, well, let's see, when's the day that I bought it? And what? August 12th. So does that mean we need to depreciate for the month of August, or yes or no?
Yes.
Yes. Now let's go ahead and see how much that asset cost is. So general ledger, my assets cost is $285.60. $285.60. Okay. So let's go ahead and solve. All right. Since I need to only depreciate 1 month's worth of the cash register. Okay. What is going to be my basis? What's my depreciation basis?
133. Oh, wait, 285.60.
Right? Good. Because it is your asset cost minus salvage value, which in this case gives you 285.60. Okay. What is my depreciation rate going to be?
0.33.
Good, right? It's going to be 1 over its estimated useful life, which in this case, 1 divided by 3 gives you 0.03333333. Good. Okay, so then how much is depreciation am I going to incur for the month of August?
95.20.
95.20. Now, is that for the month or for the year?
Oh, for the month. I mean, that's for the year. We need the month.
Good.
$7.93.
$7.93. You can solve for the rest, but that's the only number that I need to look at right there is $7.93. Okay? So, how do I journalize this transaction?
Accumulated depreciation register and cash register.
Okay, so we do not directly take off the depreciation off of the asset due to the historical cost. You got the account right for the accumulated.
Would it just be depreciation expense?
Correct. Okay, so in this case, you cannot devalue an asset that you purchase, right, due to the historical cost value. So in this case, that's why we have to use a contra account, which is the accumulated depreciation for the register. That's the contra account right there. Okay. And our debit is going to be the depreciation expense account. Okay. So depreciation expense is account number 650. Accumulated is 115 for $7.93. Let's see. $7.93, yes. Okay. And then you can write here, adjust for August for $7.93. I'm going to plug that into my ledger now. For $7.93. Credit. Okay. And of course, you're going to go ahead and put that in your depreciation expense. Okay. So very, very, very last thing that we have here for our adjustments is that you have a total of 18 mugs on hand. Okay. I have a total of 18 mugs on hand. So I'm going to go to my periodic inventory and I'm going to fill out my information because I know at the end of the day, my ending balance is I have 18 mugs left. Okay. So let's go ahead and take a look here. Quantity. Oops. We have a total of 100 mugs, right? At a grand total of $100, right? So therefore, no, we didn't have any returns or allowances. So that means we should have a total of we should have a total of 100 mugs at $100. Okay. Freight adds 0 to quantity, but it adds to the cost. So therefore, your total net purchases should be 100 mugs at $125. Then, of course, we have cost of goods sold here. We have 0 beginning inventory, and we have our net purchases. Carry those two numbers down, and your net purchases becomes your goods available. Now, in this case, we only have 18 left. So how do we solve for how many we sold? How many mugs did we sell?
$82.
We sold 82, right? You can also go back into your track record, right? If you go to your general ledger, you could go ahead and take a look at what you sold. That could be a reference point too. We sold 25 from the beginning, then we sold another 50, then we sold another 10, but we end up returning 3 of those mugs. So in this case, overall, we sold 82 coffee mugs. Okay. So then go to periodic inventory. So in this case, now I need to solve for either or. Either I solve for the cost of goods sold or I solve for the ending balance. So in this case, let's take a look at my cost of goods sold. Okay. If I sold 82 mugs, right? And it's cost per item, since I'm using FIFO, I only have one batch of inventory, so it's going to cost me $1.25 each. So in grand total, how much is my total cost of goods sold?
102.50.
102.50. Okay, so that means I should have a ending balance of
$22.50.
$22.50. Good. So I have all of this, which is correct. Okay. So therefore, I need to do my entry. How do I journalize this information? How do I journalize that I have 18 mugs left at $22.50? And how do I journalize that I sold 82 cups at $102.50? This is periodic inventory.
Would you just use purchase expense and freight? No, no.
that to zero out the account? Yes, because we're doing a conversion entry, right?
Oh, then yeah. Purchase expense, freight expense, and cost of goods sold.
In one more account. How do I reflect ending inventory?
With coffee mugs or
Good, right?
oh,
Coffee mugs. Then you got the cost of goods sold. I think I just put cost of goods sold. Yep. Okay. Coffee mugs account is account number 104. Cost of goods sold is account number 506. Purchase expense is account number 605. And freight expense is 601. Okay. So in this case, ending inventory was $22.50. Cost of goods sold was $102.50. Purchase expense was $100. Freight expense was $25. So to ensure that these calculations are correct, we got 125 on the left and 125 on the right. Okay. And I'm going to make this a conversion entry. Okay. So now let's go ahead and update our ledger. Okay, starting with coffee mugs. So account 104. Right, we have 18 mugs left at $22.50. Okay. And then we have a cost of goods sold. Account number 506, cost of goods sold. Sold 82 mugs. For 102.50. Okay. And then we had to zero out our purchase expense and our freight expense. Okay, so let's do freight first. Purchase first. Okay, so therefore this should give your account balance to zero, and then your freight expense. Which should bring your account down to zero. Okay. Okay, so now that we completed all of our adjustment entries, you've also, and then that's pretty much it. So now you need to go ahead and do the adjusted trial balance, okay? So here it is, the adjusted trial balance. Your option, what you want to do. In this case, I'm going to go ahead and make a copy of my unadjusted trial balance. so then I can quickly convert the information over easily. Okay, so move or make a copy. We're going to make a copy and we're going to put this right above the income statement. Okay, so then now this is the adjusted trial balance. Okay, so you can fix what you need to fix. Okay, so starting with our first account here. Now, if you followed along, right, everything should be exactly the same except there are three things that we entered in here, right? We've entered in, our first one was the supplies expense, and then the second one is the depreciation expense, and then the third one is the periodic inventory. If you could do it that way, that's a lot more quicker than going through every single ledger account. But in this case, since we're practicing, so let's go through the ledger account. Okay, right? Checking should still be 11,199.20, and your cash should still be 23.56. Okay. All right, let me go ahead and expand this so we can see this a lot better. Okay, so right, 11,199.21 and 23.56.89, right? Those are still there. Okay. Hold on. I have 11,199.20. Why does it say that I have 21? And they panned out evenly. Oh, that's so weird. Let me take a look at that again. Okay, yeah, it is 21. All right, so then there you go. Then we have our accounts receivable at 0. We have coffee mugs now for $22.50. So that's going to be something we need to add into our ledger here. So under cash, it's going to be, we're going to insert, and this is going to be our coffee mugs. For $22.50. Okay. Then we have, okay, then we have our supplies, right? We adjusted it, so now it's $50. And then our cash register is at $258.60. So here's supplies, right? We adjusted it to $50. And then we have our cash register at $285.60. Okay. And then let's see, but our cash register, right? If we take the accumulated depreciation, that's going to be a contra account for $7.93. So you have a choice here. You can either add it in and leave it, or you can convert it and put it into the actual cash register itself. In this case, I just want to make sure that we do not skip anything. So we have the accumulated depreciation for the register for the $7.93. Okay. Now let's see what else we have. We have accounts payable at 0. We have sales tax payable at 4052, and we have business loans at 15,000. Equity at 0. Income summary at 0. So let's take a look at all of those. Those I know for sure have not changed, right? 4052, 15,000. Okay. So the next one is sales. Sales is still at 509.15. Sales returns and allowances 1797. Cost of goods sold is our next one for 102 and 50 cents. So good. There you go. So I'm going to pop it in here. Okay, insert cost of goods sold. Okay, for 102.50. Okay. Then we have freight expense for 0, purchase expense for 0, and then we have purchase return allowance again is 0. So we need to adjust those accounts. So freight expense is 0, purchase expense is 0, no purchase returns and allowances. Okay. And then we have rent expense at 1,500, supplies expense for 15. So we have to throw in supplies expense. Okay, so we got supplies expense. For 15. And then we have, last but not least, depreciation expense for $7.93. And there we go. We pan out evenly on both sides with 15,557.60. Okay. There's your adjusted trial balance. Okay. So then, now that we finished the adjusted trial balance, now we can move on to the next one, which is the income statement. So let's take a look here. Income statement, your general operating income is going to be your sales. Okay. And things that affect it is going to be your sales returns and allowances. Okay. So sales, how much total sales did we have? Right, we have it for 509.15. We need to subtract returns and allowances, which we have here for 1797. Okay, to get our total sales to be, what's my total sales?
$491.18.
491.18, right? Things that we need to counter our sales to get our gross profit is going to be cost of goods sold. okay, which was a total of $102.50. So therefore, my gross profit is going to be what's my gross profit?
$388.68.
388.68. Okay. So now we got to include all of our operating expenses, starting with the first one here. Let's see what the first one is. We had freight expense, which is 0, purchase expense, which is 0. So here we have rent expense. Okay? Rent expense for $1,500. We had supplies expense for $15. And lastly, we had depreciation expense for $7.93. So in this case, my total operating expenses is $1522.93. Okay? And we need to subtract that out. Okay? So, and we don't have any other extra income. So here, what is my total net profit slash loss?
A negative 1,134.25.
So I received a loss for this. So therefore, you need to plug that into your equity because who's going to pay for it? The company is going to pay for it. So now we go to our equity, right? What was my equity at the beginning of August? Should have been 0 because we didn't have any original investment. We only had, we started out with borrowing money. So in this case, our net worth that our company is currently at 0 because we didn't have our own money in there. Okay? Then we just had a net loss, right? Which equaled 1193 and I'm sorry, 1134.25. Okay? So therefore, what is my total equity going to be? It's going to be negative 1134.25. Okay? So now we need to plug in all of our numbers into our balance sheet. Okay? So starting with our assets, right? My first asset I have is my checking account. Right? My checking account's the first asset that I have. Okay? And its current balance in my checking account is right 11,199.21. My next account is my cash, which is the 2,356. Okay. I have coffee mugs for $22.50. Okay. My next assets is my supplies. and then cash register. So supplies and cash register. So my supplies is $50. Now my cash register, okay? Since we're looking at this way, right? I have my cash register at $285.60, but I need to reflect the book value of my cash register right now under my balance sheet. So I need to subtract out my $7.93 to reflect that I have my total asset at 200. That doesn't look right. Is it 286? 286? 285 minus $7.93 should give you, 277.67. Okay, that's my book value for my cash register. Right? And then let's see. And that's the last thing that you have for your assets. So tally up your total assets. So I have a current total assets of $13,906.27. Okay. Liabilities. Okay, I have a couple more liabilities in that. Okay, I think I only have two. Let's take a look at my liabilities. I have sales tax and I have my business loan. Okay. Business loan for $15,000. My sales tax is $40.52. Okay, so my total liabilities is going to be 15,040, 52. And then last but not least, my equity is currently negative 1134.25. So therefore, my total liabilities plus my equity is going to give me 13,906.27. Which, if you take your assets and you minus this, they are even on both sides, right? My assets equal my total liabilities plus my equity. All right. So last but not least, I need to wrap up my books by closing out all of my temporary accounts. Okay, so let's take a look at my journal real quick, and then let's take a look at my ledger. So my ledger, I need to close out all of my sales account and all my expense accounts. Okay. Let's start with the first one, which is my sales account, right? We're going to zero them out. Say journal, right? We are going to close out all my revenues. Now, my revenues normally have a credit balance, so that means I am going to be debiting my sales. Sales account, which is 401. Okay. How much is my total sales in my general ledger account?
509.15.
509.15. Next account I have here is my sales returns and allowances, which is a contra account. So I need to credit this account. Okay. I'm going to credit this account by sales returns and allowances by 1797. Okay. And last but not least, we have an income summary. Okay. Let's see what account is income summary, because that's what we have to do. We need to zero them out. Income summary is account number 390. Okay. So if I have a total of 509.15, right, and I have a credit of 1797, how much income summary should I have in this account? Or in this case, what's my equal and opposite credit? Or what's my total income summary?
491.18.
491.18. Good. And this is going to be close out revenues. Okay. So let's go ahead and zero everything out in my ledger, starting with the first one here for sales. Right, we debited for 509.15. Should bring my account balance to 0. Okay. And we also closed out my sales returns and allowances for 1797 on the credit side. So therefore, count is 0. And we're going to bring it up to the income summary. For a credit of $491.18. Okay. So then now that we closed out all of our revenues, we now need to close out all of our expenses. So since they have a normal debit balance, we must credit all of our expenses and debit it to our income summary. Okay. So let me see. We got cost of goods sold, rent, depreciation, and I think we can squeeze it in. Okay. So again, 831. We're going to be debiting the income summary, and we're going to credit each expense account, starting with the cost of goods sold. Account number, let's see. So general ledger, starting with the cost of goods sold, we're going to zero out 102.50. Okay, account number 506. Okay. Next, we have freight expense, which is 0. We have purchase expense at 0. We have purchase returns allowances at 0. We got rent expense for $1,500. Okay. And that account number is 610. Then we have supplies expense for $615 for $15. So we got supplies expense for $15. And then we have depreciation expense, account number 650 for a total of $7.93. So what is my total expenses?
$1,625.
Good.
43.
Good. 1625.43. So now we got to go to my ledger, right? We got to zero out everything. So starting from the very bottom, 831 close. For $7.93. Bring my account balance to 0. Okay. We got to close out my supplies expense for the $15, which should bring my account down to 0. We're going to close out my rent expense for $1,500, which will bring my account down to 0. We're going to zero out our cost of goods sold for $102.50 to bring my account back down to 0. And then last but not least, we need to update our income summary. Okay, so we debited our income summary for the amount of $1625.43. $1625.43, which should bring my account balance to negative $1134.25. So that can be on the debit side, $1134.25, which, where do we see this number? This number exists here in the income statement, right? $1134.25. Okay. And now we need to plug it into my equity account to reflect my new equity. So page 3 of my journal, we have to close out income summary to equity. In this case, I have a debit balance in my income summary. So therefore, I need to credit my income summary for the $1134.25. Okay. And therefore, I need to debit my owner's equity account. Okay, chart of accounts. Oh, in this case, it's just equity for 300. Okay. And last but not least, we need to update this in our journal or our ledger. To make this account balance to 0, right? And then we have to credit this account. Which gave our a debit of 1134.25, which brings me a debit balance of 1134.25, which in reality, right, if it's a debit balance, that means we're in the negatives. Okay. Right. Last but not least, since I did my post-closing I have to do my post-closing trial balance now, which I taught you, right? It's more or less going to be an exact replica of my balance sheet. The only difference here is I just have to convert this because we're not looking for our total assets or total liabilities or anything like that, but it is going to be more or less a copy of the balance sheet. So if I go ahead and delete this, and then I go ahead and make a copy of this, all you really have to do is just format it. Okay. PCTB, post-closing trial balance. And I need to reformat it. Because ultimately what we're looking for is debits equaling our total credits. Okay. So in this case, my assets should all be debited. Okay. My liabilities okay. And then, of course, my equity is not going to be on negative. It's going to be on the debits for 1134.25. And then you're just going to have to just redo the formula. To get a total of 1540.52. To get a total of 52. Okay, which then equals on both sides. So therefore, that's how I complete this entire scenario, going through all 10 steps of the accounting cycle. Any questions?